Member Ozag, Member Rutledge, Member Schwarzy, Member Torrentori, Member Yu, and Member Zay.
Okay, we have a quorum. I know technology ran a little late. We'll hang on a couple of seconds till everybody gets in from technology. From Jim Zay. Yeah. Okay, everyone. We're going to start with our presentation. We have Mission Square for our 457 plan update. So you guys can come on up to the podium. Hey, got everyone. Okay, guys, we have people here from, out of not the county, so we want to get them in and out because they may have other things to do. So, hey, I think everybody's settled. Go ahead if you want. Good morning.
Thank you, Madam Chair. Good morning, everybody. My name is Vince Allegra. I'm actually from Mesro Financial. Mesro was hired by the county in 2018 to do an analysis of the deferred governmental 457 plan. So today is our annual update to the Finance Committee. We'll go over, unfortunately, 2022 performance. But we'll also talk about an update to the plan and everything that's going on. I will handle the investment side and the fee analysis. Then I'll turn it over to our friends from Mission Square. They will do the participant level analysis. So I believe that is the Mission Square section. If the Mesro slides. There we go. So to kick off, I figured before we jump into 2022 performance, maybe I should give a quick update on financial markets from last year. So the first slide on page 4, it is Valentine's Day, so I guess let's start with a bunch of red. I think, as we all know, performance last year was not fun to be an investor in 2022. When you look at the year-to-date performance, the red, it represents all negative numbers. Markets were not only down, they were down 20 to 30%. So just setting the backdrop, so the performance we're about to review, I think, as everybody knows, last year was not a kind year across the board. Cash and commodities were the only positive asset classes last year. The next slide, when we get the question, what happened? This is a chart of last year, and then all of the major headlines that the market had to deal with throughout the calendar year. The goal of this confusing chart is to show you it was not 1, 2, or even 3 issues. This market, this economy was hit by a major headline event seemingly every week or every month, and then the market reacted to each of these. Unfortunately, a lot of these headlines are major national, political, global events that will not be going away anytime soon. So we expect that headline volatility to continue into 2023. The next slide is really just kind of to summarize how difficult last year was. This is a chart of what we call the moderate allocation benchmark. That is 60% in stocks, 40% in fixed income. So a standard pension plan, that's the benchmark that it traditionally follows. 2022 was the second worst year for that benchmark since World War II. Second only to the financial crisis from 2008, when the stock market was down double what it was down in 2022. The issue is that second column, fixed income. Fixed income markets were not only not positive, they were down double digits, making 2022 really just historic. Unfortunately, it was historic for nothing worked. Asset allocation, diversification, none of that mattered. But I always want to end on a positive. So the next slide here, when we look forward, try to close the door on 2022 and look forward to 2023. There's actually a lot of history to be encouraged that this year, hopefully will be a lot better than last year. So the 3 bullet points here, back-to-back negative years for equity markets are very rare. Going back to 1928, it's only happened 8 times. And 5 of those happened before World War II. Back-to-back negative years for stock and bond markets have never happened before. So we think that history is on our side for at least a positive year. And then for the 12-month period following a midterm election, the market has never been negative. So hopefully 2023 brings some green numbers instead of our Valentine's Day red numbers that we're looking at. So with that, I am going to pivot all the way to slide 11. I will now jump into the DuPage County 457 plan. First, I'm going to talk about the asset allocation on the top right. So this is a participant directed plan. County employees can log in to the Mission Square website and they can choose how to invest their retirement dollars. Back in 2019, when we had 5 different vendors and we consolidated to Mission Square, the consolidation strategy was anybody that does not make an investment election, they are defaulted to either the target date funds or the stable value. So if you were in cash or stable value, you stayed in cash. Otherwise, you were defaulted into an age appropriate target date fund. I bring that up because those are still, even though 3 years later, we have over 3 years of data. Here we are, and over 75% of plan assets are still either in the target date funds or stable value. So over the last 3 years, we've only seen about 25% of county employees proactively go in and change their investment elections into the other funds. Of the other funds, by far, the most common amongst county employees were the index funds. About $8 million found its way into the S&P 500 index fund, which is also the lowest cost investment in the entire plan, with a fee of 0.015, 1.5 basis points, the lowest cost index fund in the entire Morningstar database. So one of the comments as we hand it over to the Mission Square team is trying to drive more engagement with the county employees. Of course, we had a period during COVID there where it was tough to get on site, meet with employees one-on-one. I think that's definitely one of our goals here is to drive more engagement, get more enrollments and more engagement with employees. I will be jumping ahead to slide 14 to talk about the investment lineup. So these are the investment options within the County 457 plan. Prior to consolidation, there was about 300 different investment options. Through the consolidation process, we were able to streamline the number of offerings to offer the best of breed investment in each major asset classes. We have the index funds at the top down the blend in all major asset classes, and then we complemented some active funds in the value and growth spaces. We did have one long-term watch list item, which was in the top right, Prime Cap Odyssey Growth. I'm happy to report after several consecutive quarters on watch, that fund did fall off watch this quarter. I'll report on that in more detail. But with that being said, we had one new fund come on watch for the first time, which is our foreign large cap growth, the Oberweis International Growth Fund, first quarter on watch. On the next slide is all of the fixed income and target dates. So again, for county employees that do not want to manage their 457 retirement plan, they can literally pick the year they want to retire, and that's professionally managed by BlackRock at an extremely low fee of 0.09% or 9 basis points. Moving ahead to 17, this is an executive summary of our watch list criteria. So part of Mesro's responsibility is we are a fiduciary over the investments in the plan. We are responsible for picking and monitoring the investments, and then on a quarterly basis, providing the scorecard. So investments that pass at least 8 out of the 12 monitoring criteria are deemed to pass for the quarter. If they fail that fifth criteria, they fail and are placed on the watch list for the quarter. So you can see some of our funds do pop on and off watch, but we're happy to report the one fund that was on watch for an extended period of time, Prime Cap, did fall off, but we have a new addition for the first time with Oberweis. So jumping ahead to 19, I'll touch briefly on this report. This is all of the detail behind this report. Now we're going to talk on a relative basis. Relative is performance versus peers and versus benchmark. We want our funds and to be better than average, and better than average, that number in parentheses, we want to see 50 or lower. So I will jump to the third one down, Prime Cap Odyssey Growth, because that was the one fund that was on for an extended period of time. County employees have about $360,000 invested in that fund. And year to date, so last year, despite being down 14.3%, that number in parentheses, that 2, means it was in the top 2 percentile. Another way of saying that is it beat 98% of its peers, despite still being down 14%. Its average peer and its benchmark was down 30, so double the performance, double the loss of what that fund was down. So again, this fund was underweight technology, underweight the Facebook, Amazon, and Netflix of the world. During COVID, when all those technology stocks rallied, this fund underperformed. But then in 2022, the technology companies corrected, and this fund was able to hold up better than peers. This is a lot more detail, but for the board, I would say that the number that is most relevant is the 3-year number. Since the conversion to Mission Square happened in late 2019, we actually have a full 3 years of data. And so the 3-year number is what we're putting a lot of weight in, given that represents the actual performance for county employees. And as you scroll up and down the 3-year column, you'll see for the most part, the number in parentheses is almost always 50 or lower. So the next page, for anybody that wants the full report, I believe it's about 176 pages long, but I know that I'm trying to get through this in about the next 10 minutes to turn it over. I'll jump ahead to slide 21. I will talk about our one watch list item, a local investment manager of Oberweis. They did struggle last year. They were down 37%, putting them in the 90th percentile. This all ties back to the difference between what worked during COVID in 2020 and 2021 did not work in 2022. Oberweis was our best performing fund in the lineup in 2020. It was up 64% in year 2020. Unfortunately, those stocks then came back to earth in 2022. I'm happy to report at least year to date, it is now up over 10%. So we're seeing kind of the rotation in and out of these stocks. We do not think this fund will be on watch very long. So we're happy to give it a little bit more time. So the summary of the investment lineup is there will be no changes in the near future. And we're actually on a relative basis happy with all the funds performance. I will move forward to the fee analysis. So a lot of data on all the individual funds and the investment policy statement. If I could move all the way to slide 34, please. One of the main reasons why the county consolidated in 2019 from 5 vendors down to 1 was the significant savings from a fee perspective for county employees. So this is an updated fee analysis. And despite the assets dropping from about 88 million to 77 million in 2022, the all-in fees participants pay is 35 basis points or 0.35%, or about $200 per person. Trying to put that in perspective, I know we have a lot of new faces here today. Pre-consolidation, so pre-2019, before we ran the RFP to consolidate vendors, the all-in fees of the county's 457 program was 1.12%. So here we are 3 years later, the total actual fee reduction is running about 70%, which was in line during the RFP. and is saving county employees about $600,000 per year. The next several slides are all the backup data that goes into the fee analysis. And that will be the summary from the Mesro section. I will be turning over to the Mission Square team to really get into the participant education and communication program. Be happy to answer any questions.
Do we have any questions? Member Krajewski, go ahead.
Just one, because still that prime cap bothers me. That's the one I complained about last year. And when it's down so much, of course, it's going to be the best performing coming back. But still, 5-year and 10-year history is down to his peers 1.5, I think, over I saw over 10 and 4 points over 5 years. I just don't know. There's so many other funds in that space. Why that one wasn't bounced?
That asset class, large cap growth, is basically, do we want to make, do you want to have market weight exposure to the Facebook, Amazon, Netflix, and Google's, or prime cap? So I would just say that we look at the 3-year number, and prime cap is still up 5.8% over the trailing
down
3.
to the benchmark, Russell.
It's actually slightly ahead of its benchmark, or it's slightly ahead of its peer group. So it's in the top 50 percentile. It did lag again. It's
lagged for so many years. I saw it was like what 8 a watch ago. I just thought it should have been dumped long ago. But granted, when it's down so much, of course it's going to come back more than everybody else.
The COVID environment where you have a handful of 5 stocks that provide 90% of the return, and they're underweight those 5 stocks. That was the issue. So we are still continuing to evaluate, but the reason to maintain it, we understood why they were underperforming, and that's reversed itself last year. So we will continue to closely monitor.
To Brian's question, that investment pool, what's in the pool? You talk about Google, Netflix, and the others. Those are going to adjust. They're already adjusting. Google's already let a lot of people go. So for me as a layman, knowing what that investment pool actually contains is kind of helpful and critical for me to understand exactly why you would pick one over another. So if you have a little bit of more information on those, that would be great to share at some point later, whatever.
Inside the 176-page folder there's wonderful information. End of the day, large.
Can you make it in 3 minutes? No, 2 minutes.
I was instructed to be done in 10 to 15 minutes, but I'd be more than happy to give you. Unfortunately, that asset class, again, this goes back to COVID, and it goes back to during the COVID period when all the money flowed into mega cap technology names that dominated the 2020, 2021 time period. And this fund was underweight those names. But now those companies have come back to earth, and this manager is adding value because of that underweight position.
Thank you. Member Desart?
Thank you, Madam Chair. I think this is asked every year, but what percentage of our employees are invested in this retirement plan?
I'm happy to turn it over to the Mission Square team. They will be really addressing specifically that question: who's participating, how many new enrollments, and then the county's initiative to get more people really involved and engaged in this retirement.
Thank you. I also wanted to comment on, I'd like the program. I think it's valuable to be able to plug in the year at which you want to retire. And I'm wondering how that works, like your lifestyle, your current income, how many years of retirement to plan for. How do employees access that?
So again, I don't want to steal the Mission Square thunder, but they do have a certified financial planner that is dedicated to county employees. They can schedule one-on-one meetings, meet with the planner, and do a full-blown financial analysis at no additional cost.
Wonderful. Thank you.
Sure.
Thank you, Member Desart. Any other questions? Okay, I don't see any more. So thank you so much.
Thank you.
And we'll bring up the gentleman from Mission Square. Good morning.
Good morning. My name is Ray Fortin. I'm with Mission Square. I'm responsible for the DuPage County relationship with Mission Square, and I'm going to spend about 10 minutes, if I may, giving you some updates related to the demographic information or the participant information related to the retirement plan. If we could go to slide 5, page 5, we can start there. To answer the question, we started, as Vince mentioned, in 2019. There was just under 1,200 participants with accounts in the plan. Today, we are just shy of 1,300 individuals participating in the plan. You can see the numbers here, a little over 71 million back in 2019. We had increases through 2021, and then with the market based upon, no surprise to anybody here, we went down to 77 million at the end of 2022. The one demographic or data point that we don't like to see is you can see loans went up. The outstanding loans went from $261,000 to a little over $412,000 from 21 to 22. And a lot of that is based upon what we had in the marketplace, the economy. People needed access to their funds. This is not unique to DuPage County. We saw this from an industry-wide progression of increased people taking advantage of loans in their retirement plans. The next slide. So asset allocation by age and then asset allocation by the actual asset class. No surprise to, I don't think anybody here in the room, this is a mature plan with a mature workforce. Approximately 88% of the participants are over the age of 50 in the plan. 50% of them are over the age of 60. So a very mature plan in terms of where the assets are. Looking at it from the asset class perspective, as Vince mentioned, majority of the funds, 54% of them are in the target date funds. And this is where we really would want them to be, because it's just the nature of the investments themselves, fully diversified based upon their age. So we're glad to see the utilization of the target date funds, 25% into the stable value fund. Next slide. Another way to look at that participation there, you can see the bar chart on the left side, the two age 50 to 58, 60 to 69, both represent 33% respectively of the assets in the plan, or 64% in total. Again, another way to see the historic and mature of the workforce. And then on the right-hand side, you've got the participant allocation by the different age bands there. And you can see the younger workforce, the majority of the assets are in the target date funds. And again, that's where we'd like to see them invested in those diversified funds. And then as people age, you see the numbers that the lighter blue shade, that's the stable value funds. People get a little more conservative in their nature and how they invest, and they put more money into the stable value fund, which is the most risk adverse investment option in the plan. Next slide. Contributions and distributions started in 2019, the transition year you can see there compared to 2020 through 2022. $3.7 million were contributed from employees' paychecks into the plan, and a little over close to 600,000 was rolled into the plan. Those numbers there are at the top. On the bottom is the participant disbursements, various categories. And if you go to the next slide, what I want to show you here is the cash flow. Just like any business, you want a positive cash flow. And we were trending in that direction until last year. You can see we dipped. We had more money going out of the plan than we had going in. And again, this is not unique to DuPage County. We see this across our entire book of business. Mature workforce, a lot of retirees in the plan are taking distributions from the plan. But as the county continues to hire younger employees, you're going to see that trend go back to positive on a cash flow perspective. Next slide. I'm going to skip this slide in the interest of time. If you go to the next slide, looking at the education and outreach, Kim Brownlee is the retirement plan specialist assigned to DuPage County. She did 91 consultations last year. There were 29 CFP consultations. Vince mentioned that you have an assigned CFP for the employees of DuPage. There were 33 webinars that we hosted last year. DuPage County employees could participate in. You could see there were 66 enrollments, over $560,000 of roll-ins. And again, we had a 7% decrease in participant contributions. Again, with the market, the economy, we saw this really across our book of business, and from an industry perspective and defined contribution plans, we saw contributions decrease. Next slide. Let's go one more. So we are scheduled 23 times to be on site to meet one-on-one or conduct virtual meetings with the employees of DuPage County, in addition to the dedicated CFP days that the employees can meet and set up times with them. Kim also does ad hoc meetings for the employees in terms of new hire orientations, goes to all the different locations to meet with employees. So we have boots on the ground, meeting with employees to meet their needs for retirement. I'll end there. There might be a couple more slides, but in the interest of time, I will, is there any questions?
Any questions? Okay, I have Member Garcia, Member Desart, and Member Eckhoff. Member Garcia?
Yeah, quick question. And this might be more of a question for Nick. How many total employees do we have, and how many are, what percentage do we have not participating or participating?
We do not track participation because we don't know the total employee workforce.
Okay.
There's 1,283 participants with accounts. I don't know the eligible, if you want to look at the eligible population in total.
So total employee count, I mean, obviously our head count's down, a lot of open positions, but it's probably hovering around 1950 to 22,050 in that range. So that's your total employee
Okay.
base that can participate in this program.
Okay. And it sounds like you're here 23 times, so you're definitely giving the information. I'm just wondering why at least 700 of them are not participating. It's something I think they should all be participating in.
I couldn't agree more, but it's a challenge that we see across the country in getting individuals to save for retirement.
Thank you, Member Garcia. Member Desart?
Thank you. Member Deacon Garcia asked my question. Thank you.
Okay, thank you. Member Eckhoff?
Thank you. One of the services that Mission Square has to provide is unfortunately to divide some of these retirement accounts as a result of a lawsuit. And I had an experience when I had the a qualified domestic relation order entered by a judge and send it to Mission Square by certified mail. So I know when it got there. And it just took a really long time to get that processed. A lot of phone calls. We had to get a special person assigned to it to bird dog it through the process. And so I know you're not responsible for that, but if you could just pass it on, I think I had to send it to Washington, DC is where your headquarters were for that.
That's correct.
And if they could assign some more people, because it took months and it shouldn't have taken that long. And it was very stressful for the two people going through the divorce. So
Okay, I think we need to keep
Appreciate
this to county business, Member Eckhoff, so
and
thank
it's
you.
county business. It was a county.
Oh, was it
employee.
county? Okay. I didn't know if it was one of your private people. Okay, thank you. I have Member Guston and then Member Krajewski.
Thought you said somebody's name before me. Quick question, economy doesn't change, still in the situation that we're in, high inflation. What do you expect? You have some type of, I know you don't have a crystal ball, but less people will save for retirement when they don't have money to feed their families. So what do you guys have any anticipation or speculation as to what it might look like within the next, let's say, 3 years? Because we're not seeing prices go down. We're actually seeing quite the opposite.
Yeah. I couldn't forecast what we would see from a participation perspective. All I can say is that we continue to be here at the county and talk with employees about the merits of saving for retirement, because how important that is, that we do. If it's $5 a pay, it's better than zero. And so we just continue to preach that mantra, and eventually we get across to the employees and they do end up saving. So.
Thank you, Member Guston. Member Krajewski?
Two real quick, we still have 457 Roth, don't we?
Yes,
Okay, is it one of the slides I can look between the difference between the two participants? How many are in regular, how many are Roth? I don't need to know.
I don't believe that data is in this report. We did more of an executive summary, but I can get that information.
And then the second one is, I don't know if it's for you or Vince, because I know we got 50-some% still in the targeted funds. I'm not a big fan of the targeted funds, but have you guys built a model just on the specific funds that we have to get towards the target and see which one would be better, like picking our lineup of, say, 40% large, 30% mid, international, with our particular lineup to match each target and see which one would perform better?
That's something we have not done.
Okay, but I mean, typically I'm not a fan of target, but I think you can build it. But if we have good funds in there, but I would be curious, I don't know if that's you or Vince, but I would be curious putting a lineup together of our specific funds to see them getting up compared to the target date.
There is a service employees can select. It's called managed accounts. There's an additional fee for that service, but what that does take is the individual situation for each person that selects that service and creates a model portfolio out of the funds that are in the plan for that particular participant.
Yeah, I'm just walking up, but I'd like to take targeted 2035, and then if it's whatever the percent breakout is, I would like to know our specific funds, if we did that similar, which one has performed better, 357.
Yeah, those are model portfolios, those are called, and that's something Vince would need to.
Because I'm guessing it's gonna be better than the targeted funds, but
The targeted funds by BlackRock are designed, they're based on all index funds. So BlackRock owns iShares. So they're by nature designed to be the benchmark. They're not designed to outperform or underperform. So the active managers, when you look at those 3-year numbers, on the most part, did outperform the passive benchmarks.
I meant how it outperformed similar with our own investment lineup of 12 funds or 15 funds in that similar model.
So again, I would reference the 3-year performance numbers and just seeing that the active managers did outperform as far as building models for participants. That would be the managed account, and it would be customized to each participant. I think there's 12 data points. The target dates just look at one, which is age. The managed accounts look at risk tolerance and time horizon. You can pull in your pension plan, you can pull in spousal assets. So it just makes it much more customized, but that doesn't make it easy to compare an off-the-shelf target date to a customized portfolio. So I would just look at the building blocks and the fact that our active managers added value. However you mix and match them, they would be better than an all index target date fund, which is designed to be middle of the road.
Thanks. And the last one, just that 1283 number, how many of those are gone employees that still have their plan here?
Probably 60%.
So 60% of those, the people that are participating are people
Are
who
retired.
have already left and they've left their plans here.
Yes.
So that 1283 is a lot less compared to our overall population of active employees.
Correct.
All right, thanks.
Thank you, Member Krajewski. Member Zay?
Thank you, Madam Chair. Just to follow up on Member Eckhoff, while we're sitting here, I'm getting text messages from some of our employees saying your customer service is not the best. It takes forever on the phone. You know, your employee said it took 1 hour and 22 minutes last night to get through to somebody. So if you could look into that, I think that would be appreciated.
We are aware of that, and we are addressing that with additional employees to the call center. We went through a transition in our systems, and we fell short with the hiring on the call center, and we are looking at it every day. And
Okay, great. Thank you.
Thank you, Member Zay. Do we have any other questions? Oh, Member Rutledge, go ahead, please.
Thank you, Chair. You talked about people that are no longer working here that still have funds in the accounts. Is there an opportunity for people to move their money from other accounts to this account?
For active employees, yes, there are.
Okay, any other questions? Okay, seeing none. Thank you so much for the presentation. I think it's good to come in every year, give us an update on what's going on with our plans. They're good questions from the board members. I think we can discuss this, maybe plan going, in the future.
Thank you.
So thank you. Okay, next on our agenda, we have our fiscal year 2022 general fund update. So Jeff, come on up. Nick, come on up.
Thank you, Chair Chaplin, and good morning, everybody. This morning, we wanted to talk a little bit about our general fund, in particular, how we ended fiscal year 2022. I know last night that I sent out a presentation on some of the results of our general fund. What we typically like to do is look at our major revenues, our expenses, our fund balances, our trends, and take a look at how we ended the year. And then the second part of the presentation will be Nick. We'll give a presentation on the budget surplus, which we continue to generate through the year and that we have currently right now as of November of 2022. So I'll start the presentation now by just taking a look at some of our major revenues. Starting out with sales tax. Sales tax in the general fund represents now 56% of the total budget. So it's obviously our largest revenue source. And if you take a look at the column called fiscal year 2022, this chart looks at the history of our sales tax going back to 2019. But we're talking this morning about fiscal year 2022, which is kind of right in the middle. And you can see we measure each month by a budget and the total budget for sales tax. So each month during fiscal 22, we were over budget pretty significantly. So we generated $134 million in sales tax. Our budget, which was adopted for that fiscal year, was $109.4 million. So in total, sales tax was over budget by $24.6 million. So outstanding returns again. The primary reason we think that sales tax is up so much is because of the Wayfair Act. Now, if you go online, virtually everything you purchase online is taxed. So that played a major role in generating additional income for not only the county, but for municipalities in the state. I know there's been several articles within the last couple of weeks on the state finances, and this has played a major role. That has played a major role in increasing revenues throughout many governments here in Illinois. So very good news. As far as our fiscal 23 budget, you might recall some of the board members that were on the board when we adopted the budget. Our budget is about $131.2 million. So we have a little bit of wiggle room, if you will, in case things scale back a little bit. We think that's important not to be right at the 134 million, but to have some flexibility there and take a conservative approach with sales tax because it can be volatile. We're in a period right now of growth, but we'll see how that plays out during fiscal 23. Next slide, please. Income tax. We had some excellent returns in income tax too. We measure this on a total basis. So again, looking at the column fiscal year 22A, we generated 15.6 million and had a budget of 11.785 million. So we were $3.8 million over in income tax. Corporate returns, which plays a major role in income tax, was very good. A lot of the corporations saw good returns. The allotments that went to the state were very good, along with personal income tax. The Illinois Municipal League does projections on income tax. They look at this very closely, and they come up with a per capita rate. And for fiscal 22 and 23, the per capita rate is about $155. So when we take that rate, we multiply that by our unincorporated population of about 96,000. And that's how we can get kind of a general estimate of what we will generate in income tax. So our budget for 23 is 13.9 million. So again, a little bit more of a conservative approach. We don't know if we'll quite get to that $15.6 million. But based upon all the projections from the Illinois Municipal League, we think we'll be right there going through fiscal 23. Next slide. Cannabis sales tax. This is another area, a new revenue source for the county. You can see again in the middle, fiscal 22, all the way at the bottom, we generated a total of $2.84 million, and that's based upon 10 months. Our first allotment was in February of 22. So the average amount of cannabis sales tax that's coming in is about $265,000. I'm sorry, it's $284,000. So when we amortize that out for fiscal 23, we had a budget of $3.16 million. So I know that at some point during the year, we'll have to discuss what we're going to do with not only the county cannabis tax as far as designating that for a specific program. So hopefully we'll have something on the agenda soon about that discussion. Next slide, please. So we're going to go back a little bit in time. Back in August, we did a 6-month projection on the general fund. And at that time, this income statement takes a look at our revenues and our expenditures in a consolidated fashion based upon all of our categories. And again, if you look at fiscal 22 projected, the second to the last column, you look at all of our revenues, all of our expenditures. We had estimated that at that time, back in August, that we were going to have a surplus of $40 million. At this time, November 30th of 22, we actually came in at $47 million. Again, those revenues continue to come in very strongly. Expenses were generally where we thought they would be, which is under budget. We're about 5% under budget in expenses in total, which is about 5 million under. So you combine the two, over in revenues, under in expenses, that generated a pretty substantial surplus of about $47 million. So after our presentation in August, the board had discussed in length what to do with that surplus. And at that time, if you could go to the next slide, please. We proposed a number of resolutions to kind of park this money, if you will, in different areas or transfer this money. And we did that in the amount of about $26,189,000. And you can see on this slide, these are the areas where we decided to utilize that surplus. Okay. So now, going back to our consolidated income statement at November 30th of 2022. Next slide, please. All the way at the bottom, we now have a surplus of 21.2 million. So we take that 47 million, we subtract the amount that we transferred, the 21.6, the leftover amount is $21.2 million. So that is where we are landing now as far as our financials in the general fund at November 30th. We have some recommendations this morning about what we can do with that, as far as maybe utilizing some of that for our ending fund balance and some of the other projects that we have on the horizon. So I can either answer questions or turn it over to Nick.
Did you have any questions right now for Jeff, or can we let Nick? We do have, okay, Jeff, do you mind answering some questions first, and then we'll have Nick come up? Okay, Member Cahill?
Yes, quick question. You talked about the unincorporated rate, how you were able to determine how much sales tax that we are due here. So can you go through that again?
Income tax.
Income tax, sorry.
Yeah. Income tax is submitted to us by the state as an intergovernmental revenue. The state shares a portion of that income tax.
Right.
And they base it off of our per capita population for unincorporated, which is about 96,000. And then the Illinois Municipal League projects a per capita rate of $155. So when you multiply the two together, we can get a pretty good idea or an estimate of what we'll take in for income tax. So the Illinois Municipal League really tracks that very closely, and they, give us a number of projections that we utilize through the year.
Thank you.
Sure.
Thank you, Member Cahill. Member Krajewski?
It's hard to read. I can't see the bottom of the things because of those, whatever, but when you're doing your math on there, it said we transferred 21.6.
Yeah.
We have 21.2 left over.
Yeah.
That's 42.8. No, stormwater is
Oh,
automatic.
I'm sorry, we transferred 26 million.
Okay, yeah, because I said.
So the 47 million minus 26.1.
I was seeing 21.8.
Yeah, sorry about that.
Yeah, it says 21.6 and 21.2, 42.8. There's 47 million, so there's shrinkage. So there we go. Now it adds up. You're sorry, I see it up there now. 2 point.
Thank you, Member Krajewski. Member Eckhoff, Member Day, did you have a question as well? No, Member Eckhoff, go ahead, please.
How much does financial forecasting or forecasting the economy go into these budget projections? Because my concern was during our last presentation, they showed that loans out of the retirement account were way up, almost double. And I keep on hearing reports that credit cards are being maxed out at a much higher rate than the last couple of years. So I'm afraid that we're sort of spending today what we should be spending in 2 years. So that's going to be a natural dip in the sales tax revenue.
We pay very close attention to our revenues that are sensitive to the economy, if you will. We have a number: sales tax, income tax, personal property tax, and also we generate a lot of money from real estate transfer taxes. So we pay close attention to what those transfer stamps will be. They brought in about $6 million last year. In the 23 budget, I think we only budgeted 4 million for that. So we didn't take full advantage in the 23 budget of where we landed in fiscal 22 as far as a lot of our revenues. We're somewhat conservative, but we wanted to get to a realistic point where we think we're going to be. So whether we'll have a recession that takes sales tax back 5%, 8% or so, I'm not sure. Our February receipt for sales tax that we just received was over budget again. But remember, that was for November sales. In March, we will receive Christmas sales. So we're anticipating, we heard Christmas sales were pretty good. We're anticipating another big allotment. After that, when we start in April, that's when we're really going to have to monitor to see how the economy is doing now and how all of these revenues that are sensitive to the economy are coming in.
Well, it just seems that people are maxing out their credit cards and taking loans on their retirement accounts, and you can only do that for so long. So that's what I'm concerned about. But
Well,
6
yeah,
months from now,
we'll pay attention to spending, things like that.
you're to hear first.
Thank you, Member Eckhoff. Member Zay?
Thank you, Madam Chair. I mean, again, I think we talked about this last year. You gotta be cautious. I mean, obviously sales tax up because inflation's up 7, 8, 9, 10%. Things cost more. So obviously sales tax is higher. If that stops quickly, we're gonna see a quick decline in the sales tax. So again, it's double-edged sword. It's good news, but it's bad news. Good news is we're getting more sales tax. Bad news is it's costing people more money to buy things. So, I mean, it's something we have to, if we just said we're gonna, inflation's up 10% and add 10% to our sales tax, it'd be $10 million right there. I mean, so again, it's just being cautious is always good because like you said, we're months behind. Who knows what's going to happen here as we saw the market crash last half of last year, and then beginning of this year is coming back. But Same thing could happen, sales tax could quickly go down, so.
Right.
That's why I think we budgeted at a lower number. I think that's always good.
Thank you, Member Zay. Any other questions? Oh, I'm sorry, Member Guston.
Yes, and to Member Zay's point, things are more expensive and I'm in the real estate industry, so the prices of houses have skyrocketed for, during the COVID period and also now. There's less transactions, but they're selling at higher prices. But we all know that those can change rather quickly.
Right.
So having some kind of investment or some type of savings plan in place might be something that would be beneficial for the future instead of spending all the money, which, we have to do if we have to do. But holding on to money and having it invested in something that actually would give a better return. I think not that we do CDs, but from a family perspective, CD prices, interest rates are going up. So people will transfer their money into things that are going to pay them a higher rate of return on their investments. And so I'm hoping that the finance department can think out of the box and do that type of thing too, not just, hey, we've got this overage, we can spend it. Where do you want to spend it? I'm not saying you are, but I would like the flip side of it too, which is, hey, we hold on to this. This is where we think how much we should do and where we think it would be held the best.
You segued into a really good point, and we haven't discussed our reserve yet or our fund balance in the general fund. And we have some proposals this morning on what to do with that. And we'll talk about that.
Great, thank you. Thank you very much. Oh, Member Krajewski.
One last question. We had budgeted, you said 900,000 for investment income.
Actually, I know we talked about that. I checked it. It's about 1.3 million.
Okay, which is still gonna be way low. If we got 100 million sitting in reserves, we go down to the bank here and get 4%.
Well, I'll talk with Gwen again, and
Seriously.
we work with her office and they do.
But 1.3 seems awful low for $100+ million in reserves.
Well, remember, they have some investments that are still a year old that are generating a lower interest rate. Like, sometimes they buy 2-year CDs, money markets are still a little bit lower. They're not in equities or anything in the higher yielding investments.
Could be an interest account, but
See,
maybe I need to look into, we tied money for a year. 3 months.
yeah, absolutely. They do a cash flow in the treasurer's office based upon our budget ladder, yeah.
Thank you, Member Krajewski. Thank you, Jeff. Now Nick. Thanks, Nick.
Thank you. Good morning. Thank you, Jeff. So Jeff had the kind of continuing on where he left off. 21.3 million is a surplus that we are predicting from the 2022 budget year. Fairly accurate. It could change with 50,000 plus or minus as we do the final closeouts for the year, but that's pretty much where we're at. You saw the slide in Jeff's original part that talked about in August, we met with the board, allocated 26 million for projects that were, the main theme of those projects were taking pressure off of future budget years. And we're kind of continuing that with what we're doing. So we have some decisions, you have some decisions that we need some guidance on. We've got some ideas, some recommendations, but ultimately we need some direction from the board or from the finance committee today with how to proceed. As we talked about, 21.3 million is what we're going to be discussing today. What you're going to see in all the projects that we're proposing, as well as the previous ones, we are looking to do down payments, pay off existing obligations to take care of pressures off future budget years. One-time considerations, that's the key for what we're doing. What we don't want to do is take this surplus and increase operational expenses year over year, because there's no guarantee that this additional revenue will be out there. So we're trying to do one-time expenses, not operational, to create a structural deficit in future budget years, and that's what you'll see. So the important thing, and everything we've done, and we've heard it from a lot of people here today, is fiscal conservative approaches. Everything that we are saying today, everything that was decided for the most part back in August we would say, put it into accounts. Those accounts likely would not be spent until the end of 23, 24. And it would take a further board action to spend those. So if this money is decided to put in the accounts we're recommending today, it will go in accounts. And if for some reason there is a very deep recession, we need to tap that money. That money is still available to this board to pull back off of what we're doing. Our recommendation, like Jeff said, we're cautiously optimistic, and we're going to see for the next month or two, probably good sales tax because we're still working off of 22. But we want to see, what's the sales tax revenue in June, July, August. And so a lot of this money will still be sitting there. And if we have an emergency, this money will be available for the board because there will be another action to spend any of this money. So that's something to keep in mind as we move forward. Next slide. So first and easiest one, our general fund reserves. So we are suggesting out of the 21.3 to add another 3 million. That is kind of a nod toward the unknown of the future. What is, 9 months from now, 10 months from now, what's that going to bring with sales tax? We are highly dependent on our sales tax. That is our one Achilles heel at the county, is our dependence upon the sales tax versus other revenue streams. Always has been, always will be. So we do have a healthy balance. We have 98.9 million. If we put the entire 21.3 million and give us 120.2, that we don't recommend, because that would be 60% of our total expenditures. That's a fairly large percentage. We think that might be a little bit overdone. Keep in mind, our current board policy is that 25% in reserves is what is like the floor. So we're well above that. So our recommendation would be a $3 million reserve contribution to take us up to 101.9 million, which would be 43% of the 2023 budget. Obviously, as the budgets increase, that has to increase, as we think that is a very healthy amount and will give us a little bit of a cushion. We do have a cushion built into the 23 budget already, as Jeff talked about. This will be a further cushion. And what we can do is, once we get through all the slides, we can kind of go back and talk and do it. So next slide, that's our recommendation number one. Number two, this goes along the lines of paying off future obligations we have. We know our current ERP system is no longer supported after 2026. We need a new ERP system. The board in August already made a $6 million down payment. It's expected to be 10 to 11 million. We don't know. We haven't put it out on the street. We're recommending, let's go ahead and take 4 million, and we're paying off an obligation before we ever start it. I mean, to me, that doesn't happen very often. We know we have an obligation that's going to hit this county in 2026. Now, granted, we're going to be paying that. It's a 3 to 4 year implementation. So we're going to start spending that probably at the end of 23, beginning of 24, but having it totally paid for, or, maybe we're a little bit short, but 98% of this project's paid for ahead of time. That's our recommendation to finish the ERP contribution. Next slide. So our other one currently, we have a tort liability fund for those new members here. Tort liability fund follows, it covers a lot of obligations here at the county, a lot of unknown obligations that can pop up. That's where the state's attorney maybe talks about settlements or cases that we have. That's where it comes out of. Our insurance claims, our insurance costs, auto liability, professional services for legal services, cyber insurance, a lot of different obligations come at it. We are recommending an additional 1.8 million contribution in it. If you remember, back in August, we had a $2.5 million contribution. We feel that this will fund us for the foreseeable future. We don't know of any other obligations out there, but it's basically a rainy day fund for when things might go wrong, but we have it covered and we're not scrambling for money in 24, 25, or 26. It will have, at that point, we will be funded and for the foreseeable future for that. That's our another recommendation. Next slide. So this one is unlike the other ones we're talking about, because this is kind of a new initiative. but it's a down payment. But we've kind of, staff has heard from the board, affordable housing is important to this board. It is important to the residents of DuPage County, and it is becoming a critical issue in DuPage County. And this is kind of a nod toward that, the 2.5 million. It's a start. It's a down payment. We know that. But what we've found is once you kind of put money toward a initiative, toward a purpose, we can then form the committees, form the subcommittees, get the direction going. You have real money that you can start making decisions as a board where to go. 2.5 million, what you use it for, that's going to be up to the subcommittee, but we would set that aside. We would put it into the building and zoning department budget as a dedicated account, since they have an enterprise fund. They already are working on clean and lean. It's a good match for the two. They would be highly involved in any efforts moving forward, whether you use this 2.5 for incentive funding, development of potential housing units, that's up to the board. But at least starts the discussion, it starts the funding profile. And if we're lucky enough to be having a surplus that we're talking about at this time for the 2023 budget next year, I would recommend that more, because this is an ever increasing demand that's needed out there by our residents, and it's only going to get more acute as we move forward. So this kind of starts that discussion with putting money toward it. So that's where the 2.5. Next slide. And then the biggest part of this is our county infrastructure fund. And the biggest part of that is our parking deck rehabilitation. Tim Harbaugh, facilities management, myself have been saying since probably about 2018, 2019, that the parking decks, which are original to our, at least this parking deck here is the other one built a couple of years later, but they're now close to what, Tim, 40 years old? Over between 30 and 40 years old. They have not had any rehab. We're not talking any enlargement, any increases, anything, simply rehabbing and maintaining what we own. They are starting to deteriorate. The metal within there, I mean, they're still safe. We've had studies done the last couple of years. We know what we need, but we are quickly reaching the point when, if we don't do something to it, the cost of repairs will go up significantly. They are going up every year. We know that. We identified this in 18. The good thing is we originally anticipated doing a bond issue in 24 for these parking decks. You're halfway there with this contribution. So if we happen to have another good year in 23, maybe we're 100% there without doing a bond issue. But this is an obligation. The stormwater detention, the sidewalk repairs, AD accessibility, and the big parking deck, that's 15 to 16 million of this. We are handling that with cash on hand. That's very uncommon. We fully anticipated we would have to do a bond issue for a project this big. This is making it so we may not have to do a bond issue. So we're halfway there. It was going to infrastructure fund. And this is a good example of where if this recommendation is agreed upon by the committee, that would go into a fund. And if for some reason in September of this year, we see our sales tax plummet, you can pull it out and you have that available for emergencies that we're trying to deal with. I would park in the upper level if I was you. So next slide. So here's a summary. Here's a summary that there's really nothing exotic in here. It's straight up, what are our obligations as a county? Really, the affordable housing is the only, but that is the biggest need we're seeing among our residents. But the rest of them take care of obligations. It takes care of debts we owe for in future budget years. So it will take pressures off of them. Next slide. Here you can see everything in totality from what was done back at the August meeting with the new. So all of the previously approved by the board are in the top, and then the new are at the bottom. I think, yes, that's correct. And so it's the total of the 47.5 million. Once again, look at these, the vast majority are taking pressures off of future budget years, are taking obligations off the books and making it easier for the future with the money being available. If you know, once we have a discussion here with what you as a board would like to move forward with, we will move forward. We have to make the decision, at least a show of hands today. And then what we'll do is take the paperwork forward in 2 weeks at our next finance and board, because we need to wrap this up. If we do nothing, everything gets automatically swept into the reserve fund, which is an option too. But if we want to make these moves, we would then bring the paperwork back in 2 weeks for the board to approve each and every appropriation we're talking about. So with that, I'll open it up to any discussion questions.
Okay. Yeah, thank you so much, Nick. So I just, great presentation, Nick and Jeff. I really appreciate you coming in and giving this update and making these recommendations. I just want to, on the reserves, I just want to make one additional point. So if we were to put all of our surplus into reserves and we need that money, that triggers our bond rating companies, and pulling from the reserves could bring your bond rating down because they don't like to see governments pull out of those reserves. So that's why we don't want to put all of our money in the reserves. That's why we want to allocate it to some of these other areas so that we can use it without triggering maybe a decrease in our bond rating. So that's one thing, you know, with the reserves. And we have a great, healthy reserve. I think this is, I know, definitely the largest
It's
reserve
the
we've
largest
had.
it's ever been.
So, and then if you look at this plan, to be able to do all of these capital improvements without going out for issuing bonds or tax increases, this is really unique, really incredible that we're able to do this. So it really is a good conservative plan. And that we're able, like I said, we're able to do these projects without issuing bonds or increasing taxes is really something. And the affordable housing, I know many of you ran on affordable housing. It's important to you. I know a lot of you worked on it in your municipalities. And I think some of that knowledge is going to be very useful when we talk about affordable housing. But I'm very excited about this initiative. We tried a couple years ago to bring it forward, never took off. So I'm very pleased that, you know, we're bringing this forward to the board. So with that, I think we can open it up to questions. Member Desart and Member Zay.
Thank you, Madam Chair.
And Member
Regarding the general fund reserve of $98.9 million, where is that invested and what is our return on investment? Because I would imagine that generates thousands and thousands of dollars annually to put back into the reserve.
So it's a great question. So all of our funds are the investments are directed by Treasurer Henry. There are certain restrictions. Obviously, you can't do stock market, anything that can go down, everything. She has been very aggressive, and I know we've talked over the past couple of months. She actually hired a new financial advisor to help her through that. I helped with the RFP process on that, but she went through, hired a new one. And she's probably online right now, but she is aggressively looking for maximum returns on that. But it's typically laddering CDs, money markets. And I don't know if Treasurer Henry is online. Is she? We can definitely have, obviously it's a lot of money, and it's not just the reserve. It's not just the 98 million. You have all of the ARPA money because that is, we've done a very good job, and Mary Catherine's been working with the treasurer to figure out what the spending pattern is, and we are trying to invest that. That's where you're getting the interest from there. She's invest the special revenue funds, public works, building and zoning. So there's a significant amount of money that she's trying to maximize our returns on.
And it goes right back into the general.
Absolutely. Everything, every fund that has money, if they generate, that money goes back in the fund that generated it.
Gotcha. I'm a huge fan of paying off our debt and paying for these one-time expenses in order to take pressure off future fiscal years. Just a couple of questions. Let's see, regarding the ERP system replacement, you're saying that with the $4 million, it would be 90% paid off. Why not just go ahead and pay it off 100%?
Well, we don't know what it is. We think our estimate is it's 10 million. What I don't want to say is, I don't want to stand here, and it may very well say that's 100% paid off until we go on the street and we say, we all think that it's right around 10 million is correct. So we think it's 100%, but I don't want to tell you unequivocally it's going to be paid off until I put it on the street and bid it. which is going to be later this year. I might be a little bit short. I might be a little bit over. I don't know.
So perhaps in the future, we could. discuss
Absolutely,
being on
absolutely.
the
Once we
100%.
bid it out, we'll know for sure, but I don't know until I put it on the street.
Gotcha. Let's see. Okay, you said the tort liability fund, the 1.8 contribution will fund us for foreseeable future. That sounds good to me. Affordable housing fund, you know, everybody knows I'm so supportive of affordable housing in DuPage County, as is our chairwoman. Where did the 2.5 million contribution come from? Because it seems like a random number and it seems like a drop in the bucket.
It is a drop in the viewer. It's absolutely a drop in the bucket. And it's just, as we, you know, we knew what we wanted to make a recommendation, and we tried to fit everything in. And we also tried to figure out how long will it take to spend it? Because if a committee or a subcommittee is formed, you guys do the investigation, you figure out plans, you vet it, you maybe hire people. We don't think you can spend 2.5 million in 2023. I think it's too quick. And that's kind of where we were kind of figuring out. And by the time you come anywhere close to spending that, we will have then the 23 surplus, if there is any available to talk about at that point.
Okay, thank you. Infrastructure fund. The campus stormwater detention improvements. Didn't we already use ARPA funds for that? Because I know that under the ARPA guidelines, stormwater was a huge part of that process. I thought we already designated funds.
So
for ARPA.
there are some, but realize with all the improvements that we are making here on campus, the building additions for the animal services, for care center, for potentially a health department increase, we need more detention to meet the ordinance. So this is straight up building more detention to meet the ordinance as we move forward. And you know, to facilities managed credit, what they've done is they have met with every single department, figure out what they're going to be building. And instead of everybody building their little pocket of detention, we are going to build one entire combined expansion to cover all of our known projects moving forward.
Gotcha, thank you. And thank you for going through all these questions.
No.
I've just got one more. The parking decks, you said that you identified the need to repair, replace whatever in 2018.
Mhm.
And I don't recall this really made a priority when we got the CARES funds or the ARPA money. So well, what do you think about the parking decks? Are we talking about, well, we're going to need to replace them in 5 years, 10 years, 20 years
So-
now? Like, are they crumbling now?
No. So they're not crumbling, and we knew this, and they definitely did not qualify for ARPA or CARES Act. They definitely did not. We looked every which direction and angle we could to see if we could, but they definitely did not. They're not crumbling. They need to be like any building, any infrastructure you have, they need to be maintained. But in all of the concrete, you've got metal in there. And if you think about it, all the parking decks are salted during the winter, and the runoff goes in there, and that is corroding the metal. So what happens with all this rehab is you typically, you take back some of the concrete, you replace metal, and then you redo it, and you basically have a brand new parking deck. And some areas are worse than other areas. We've already done some of the very, very worst areas, but we know what and once again, there's another project where we'll know how much it is once we bid it out, know how much it is. But we have an estimate from our original preliminary design of right around the 15 million.
Thank you. Thank you for your presentation. Thank you for your answers. And Madam Chair, again, I just wanted to reiterate that I am a big fan of paying out these one-time expenditures and getting these out of the way. Thank you.
Great, thank you. So I have member Zay, member you, member Evans, member Ozak. So member Zay, go ahead.
Thank you, Madam Chair. You know, Nick, all we're talking about today is placeholders. I
Mhm.
mean, all this
Is
has
it?
to go through committee, all this has to come back to finance, also go to county board. So if something changes in 6 months, we can always re-divert it to something else. So
Absolutely.
all we're doing is putting as a placeholder today, talking about the future.
Yep.
We're not making any final decisions. We're just saying, hey, we're gonna put these in different buckets and we're gonna see what happens. And
You-
again, the affordable housing, I don't think we can get get something up in that time, but it's a good start. And it shows that we're serious, that we're thinking about it. So again, we're no final decision. This is gonna go through the process and it's all gonna be bid and everything's gonna be, you know, everybody's gonna have their say on it.
You as a board can break glass in case of emergency at any time, and these funds will be available. I mean, and all actions have to come through this board.
Great, thank you.
Thank you, member Zay. Member you.
Thank you, Madam Chair. I would like to see a more robust down payment to the affordable housing program, just because this is something that is really near dear to my heart. It's particularly because for the general fund reserve, it already says that it sits at 60% of fiscal year 2022, and that is more than double what the current county board policy advises. So if there's any way that we can increase close to double, if not double, the affordable housing, that is really what I would like to see.
Well, Nick just mentioned, so we don't think we're gonna be able to spend that in 2022, and that when we go look at the 2023 surplus, we can add to it. But it would be the will of this committee if you want to up it right now, or if you want to, leave it as it is at 2.5 million for this year, and then see where we're at going into 2024. So, but it would be the will of this committee to see how we do that. But we didn't, Member Krajewski and I met with staff last week, and we kind of went through the numbers, and we kind of felt that this was a comfortable number for us to start with this. But again, if it's the will of the board to increase this, we can take a consensus on that as we move forward with the meeting. So, but thank you very much. Member Evans.
Thank you, Madam Chair. Nick, I was wondering if I can ask for a placeholder for maybe an employee incentive program, something. I know you don't want to raise operational costs, but I see nothing for staff included in this, and just even something like gift card, like a lottery. 5 employees every month get a gift card or something like that. It would just go a little way.
So obviously that's an operational. I will tell you that there is within your 23 budget, you as a board have a fairly significant contingency line within the 23 budget that would absolutely be available within the contingency if you as a board would like to move forward. I would not recommend, because we're trying to focusing on like kind of large one-time type of stuff in this, but that's absolutely something that would be eligible and should be considered as part of the contingency line.
Okay, perfect. Thank you.
Thank you, Member Evans. Member Ozog.
Thank you, Madam Chair. First question, you said the garage is 43 years old. What would be the usual replacement?
It's between 30 and 40, depending on which one you're looking at.
Okay.
I will tell you that we are likely overdue with not replacement. Those, I mean, if you maintain them correctly, they can last for 80, 90 years if you maintain them aggressively. But if they get to a point of disrepair, then there's no replacing. We are pushing the envelope for when we should be working on this garage.
So we've been doing maintenance, but we're not at a complete rebuild situation.
We are not in a complete rebuild, and absolutely not. And we have been religiously looking at this, studying it. We have experts, the areas that we feel could expand to more costly quickly. They have been repaired.
Okay.
We have absolutely been on top of it. And that's why in 18, we came to Public Works Committee just to say, hey, want to put this on everybody's radar.
Right.
Every year in the budget, 19, 20, this is still on the radar. This is keep in mind. So we knew this was coming. This is no surprise.
Correct, but and so aesthetically, they may not look that great, but structurally, they're fine.
Structurally,
Okay.
absolutely. Yeah, we wouldn't, yeah,
Okay.
they're absolutely.
My other comment is about the, I think we need to consider this affordable housing as seed money, because I agree in terms of not being able to spend the entire money this year. We would basically be using this to structure a program. So we would be looking at consultants, et cetera. So I think the 2.5 is appropriate.
This is a down payment.
Right.
I
And
mean,
really 10 months to spend
Absolutely,
it
it's a
at this
down
point is going to be but it's a good start.
Mhm.
And so seed money is where I think we could look at it. But thank you. That's it.
Thank you, Member Ozog. So I have Member Krajewski, Member Guston, and Member Tornatori. So Member Krajewski.
Yeah, thanks. And as members, Zay said, we have multiple buckets regarding affordable housing. I mean, we're not going to be building affordable housing. It's going to be the private market where we maybe help out with the tax credits out there and all the different funding availabilities. We would just be maybe helping with maybe a shortfall, but all these buckets 6 months from now will still be there. And if it comes up that we need 4 or 5 million, there's a bucket we could just move it from.
Absolutely.
We have the same conversation 6 months from now and say, you know what, we're just reallocating amongst all the buckets. But the one bucket that we may be using, and just quick question, did you talk to Paul Haas regarding the clean and lean? You know, again, we get our money back on that, and I would just dump more into that and just do more clean and lean, but the conversation we had last week,
Yeah.
he may not be able to handle anymore.
So from a clean and lean, and I think that this is something that maybe we can bring it up, have the discussion in development with member Tornatori on that one, but it is my understanding that from a clean and lean, they, at this point, given what the cases they know about, given where they're at, these cases, once they go to court, sometimes can take 11 months, 24 months to work through. They feel that it's sufficiently funded, but I will absolutely, I think we should have that discussion maybe in development. That's because that's kind of where the Clean and Lean program was born out of. But it's extremely successful. Those don't know the Clean and Lean, and it will be a compatible program with the affordable housing that might supply some of the
Because
properties.
we're putting what, 600K in there?
Yeah, if you look
From
on the.
surplus, wasn't there
Yeah,
some-
because if you look on the Clean and Lean program that we did, I'm trying to think, we gave 250,000. IDA is giving money as well. So IDA has given a substantial amount of money toward the Clean and Lean program over the years. And we utilize our in-house resources to clean up properties or tear down homes.
Well, then, I mean, maybe, and we have it in development, but again, there's plenty still out there that we can clean and lean. And do we have to increase our capacity? And because we have plenty of money to do it,
Yep.
and we'll get that money back.
I will tell you, we will sit
I
down.
understand
and
if
if
they're
they're
too busy.
Yeah, I will, if we have any choke point on our end, be it money, be it staffing, we will definitely come to this board, because we know it's an important program, so we'll definitely bring it forward and ask for those resources.
Yeah, because I would look at it, even if we have to bring people on, because again, we get that money back, but we might as well start cleaning up in DuPage County with some of these places that are eyesores in neighborhoods. Thank you.
Okay, so I had
I
member
know,
Guston, member
trying to make-
Tortori, and member Ozak. So member Guston.
Thank you, Chair. And thank you. I agree with you. I agree with member Oza. I agree with member Kajewski. I think it is just seed money for the affordable housing component. And I think that's a good price to start with. We got to get it up and running, but it's not going to jump out. It's going to take time to network and get everything done and look at the criteria for all of that stuff. So I'm comfortable with that for sure. Our bond rating, what is our loan debt bond? I know we probably have multiples, but what's our average? Because bonds were really at a good point for at least 3 to 4 years, and it was cheap money. Where is it at now?
So-
Why is there this potential change on this bond issue?
Why aren't we going for a bond issue? So
I know it's higher.
with, I mean, to what Chair Chaplin talked about
Yeah.
regarding that. Anytime you always risk whenever you have a reserve for an organization and you pull from the reserve, you don't know what the response from the rating agents will be. They might be like, no big deal. They might say it's a big deal. You don't know. But as far as what our debt is, we have a very, very low debt to organization, the size of our organization. We've actually, our 21 surplus, and for those members on 21, we actually use some of the debt or some of our surplus to pay off the debt that could be paid off. We do have some non-callable debt on the books. We have some federal debt on the books, but we are in very good shape with the debt. I know we have maybe some coming off the books in a couple of years, but we looked at that. There's not anything that we felt could be paid off by this surplus.
Okay, because we always had a AAA bond rating, and we
Yes.
were always
Yeah.
very cautious about what's our debt,
Mhm.
what's our reserves.
We
We
have
didn't
a-
want too much reserve, because then people go, you're overtaxing us and you have all this reserve
Exactly.
and we're fighting for a loaf of
It's-
bread, so
it's a very delicate
very
Mhm.
delicate balance, and the county has been in such great financial shape for decades. I'm sure the AAA bond rating agencies take that into consideration too. So I just kind of wanted to know what that
As I
portion of
mentioned
it
before,
was.
the one thing that does hurt us is our over reliance on sales tax. It always has. It's always been a
Right.
point that's been brought up.
Yeah, more eggs in the basket. One thing I didn't see on here, and maybe that isn't for this meeting or this discussion, was the mental health aspect of things moving forward, mental health and addiction, which typically kind of go hand in hand.
Yeah.
Maybe that's not something that's going to be funded out of the general fund. Maybe that's
So-
going to be something totally different. It could be a conversation for another day. You could just tell me.
I can tell you it's a conversation for March 28th. So it's working with, and I don't want to kind of steal her thunder, but Karen Ayala will be coming over here and talking about that comprehensive plan. She's been working with our chair with that. And I will tell you that, you know, mental health, substance abuse is tailor-made for ARPA, for it's tailor-made for the opioid settlement. So those are the type of discussions we're having the 28th. So
Perfect.
we're absolutely looking at that as well.
Great. Thank you. Thank you.
Thank you,
Chair.
Member Guston. Member Tornatori.
Thank you, Madam Chair. As some of you may know, I've been on the board of the Illinois Housing Development Authority for 10 years. And I currently serve as the chairman of the Finance Committee of that board. As to Clean and Lean, I'm working on trying to get more money from IDA for that, but I don't think money's our problem with the Clean and Lean. We've got enough, and whatever we spend in theory comes back to us. That's the lean part of the clean. So, but there's presumably going to be more money. As to affordable housing, that $2.5 million could be 250,000 or 25 million. It's really irrelevant. The way affordable housing works is that we have to find properties and developers who are interested and willing to develop affordable housing. And then they make their various applications to lenders or to IDA for low-income housing tax credits, low-income loans. So the $2.5 million that we're looking at isn't going to build anything. What we need to do with that money is to incentivize developers to look for places, look for properties with the cooperation of the county to find places for people to live who work in the county and can't otherwise afford it. My suggestion is that we get somebody from IDA. I know the executive director would be happy to make a presentation to come here, talk about what affordable housing is. We don't have a lot. When I see our projects at IDA every month at our board meetings, and we're lucky to get one a year out of DuPage County. It's a lot. And it's because we don't have as much land and because there's obviously not the same rehab that you have on the west and south sides of Chicago or Southern Illinois or other places that need it. So I think perhaps that, and I can check if we want to do it. I don't know exactly how we're doing this. We have a separate committee that's going to be established. If we do, maybe that committee can do it, but I'm happy to work as an intermediary to get Kristen Faust, who's our executive director, to come out and talk about what affordable housing is and how we can implement it in the county. Because the $2.5 million is, that number doesn't mean anything.
Right.
Really.
I can answer one question is how we're going to do this. And I know Chair Conroy is waiting for obviously the input this morning. And if it's a positive reception for this, then waiting for the final appropriation in 2 weeks. And once that's done, she would then at that point probably issue kind of a memo saying, you know, maybe forming a subcommittee, forming another committee and basically lay out the strategy. And then you as members then have to move forward with it. So we would likely, she's going to figure out how she would proceed at that point.
Thank you.
Thank you, Member Tornatori. I have Member Ozak.
Thank you, Madam Chair. For new members, could you explain in 30 seconds, clean and lean, starting with its LIEN?
Yes.
Not lean.
So
opposed.
it is the only program we have where every time we're in a subdivision, the entire neighborhood brings our people cookies. So it's so basically Clean and Lean program is when you have a dilapidated, rundown, maybe trash and debris that is just going through courts constantly. It's a high legal bar, but once we do that legal bar, then the county can get involved and bring it to a completion. And there's so many good stories we've had with Clean and Lean, where not only we clean up a property, but we maybe help. There's usually an underlying problem with the homeowner or property owners, be it mental health, substance abuse, you know, family estrangement, that we bring in a whole team to help those property owners And that, so we're helping them, but then we're helping the neighborhood as well to make it, you know, a vibrant neighborhood. And so sometimes the court action, because there is so much expense on our end to clean it up, that the court then, or voluntarily, they're like, you guys, the county, you just take the property. And those are the type of properties that we start to acquire that could maybe be used for this affordable housing theoretically.
And how long has the program been in effect or?
Sam, what do you think? About 5 years, 4
Five.
years? 6 or
Okay.
7, maybe?
Thank you.
Thank you, member Ozak. I have member you and then member Covert. Member you?
Thank you, Madam Chair. So I really appreciate Member Tornatori and what he stated with regard to, you know, doing an affordable housing task force of some kind, or really looking into the issue. I do think that a presentation would be really, really helpful. I just really want to talk again about increasing this. I know, as Member Desart stated earlier, that this is like a drop in the bucket. I really want to see more of an investment. We all really care about affordable housing. I ran on affordable housing because my constituents, people in District 2, stated over and over how necessary this was and how much they needed it, along with mental health services, obviously. And as Nick stated earlier, that this is a DuPage County issue, that this is something that we really do care about and we want to invest in at this point in time. The League of Women Voters, you know, they've done multiple presentations on affordable housing, different programs and different options. And I think that just by doing $2.5 million, you know, we can decrease the reserve, the money that goes into the reserve. This would not change anything else with regard to the other allocations. I love all the other proposals. I just want to see a greater investment into the Affordable Housing Fund, just because we don't know what's going to happen. We don't know what programs we want to do. There may be lots of options in the future, and I just want to be able to say that we have enough in the Housing Fund to start something important.
Thank you, member you. And when we get consensus, I'll ask when we come to that part of the meeting. And then member Covert.
Thank you. Thank you, Madam Chair. I remember Member Chaplin, you really worked hard on the affordable housing issue along with Member Desart and Member Rutledge. And I wasn't on the committee, but thank you for your work on that. But I wasn't sure, it's just my input, but have we looked into possibly tiny home communities? Because there's some models that already exist in different states where they have these cute, colorful homes, and there's people that have jobs in this little village area and they get back up on their feet. Plus it looks really nice, and it feels comfortable to the people who are there. And I'm really excited to work on this issue. I'm not on the committee, but it's just my input.
Well, that's, really, there's not really been any discussion about what type of developments are going to be coming in. So I think that's what's the exciting part. Once Chair Conroy, decides what direction she wants to go in and, how she's going to form committees or subcommittees, that's where we're going to really get into the weeds. And I think it's going to be very exciting for us to do. So I'm really thrilled about this. So thank you for your input. So, okay, do we have any other questions? All right, so as we go through this, the items that Nick has for allocating, I know member you wants to increase the affordable housing amount. What amount would you want to? I'm just taking a census to see if we have it. What do you want? 5 million in or? Do we have consensus to increase the affordable housing up to 4 or 5 million? 4 or 5 million? Can I see your hands? Okay. Okay, so we don't have consensus on that. So we'll keep it at the 2.5 million for now. If we do have the funds and 6 months later, if we see that we're going to need money, we can always bring it out and put it into that fund. So don't be discouraged. So, okay. Do we have consensus on these items in totality, or do we have to go by them one by one? Do you agree with the whole plan? Okay, so everybody in favor for the consensus for this? Great, okay. You guys have your direction. Thank you so much. Thank you very much for the presentation. Thank you, board members. Good questions. Appreciate it. So now we move on to public comment, and I have one public comment from Joe Sheehan. Yes. Yes,
I
member-
wasn't done with the previous conversation. Just real quickly, I gave my consensus. I raised my hand for my consensus. But Nick, I really would like you to follow up with our tort liability fund because I'd like to pay that 100% or not, I'm sorry, hold on. What was the one that? was-
ERP.
Yes, yes,
ERP.
yes.
I will tell you, ERP, we think as a staff, 10 million will fund it entirely. We won't know until we bid it out, but as soon as we know, we will tell you.
Perfect. Thank you so much, Chair.
Thank you, member to start. Okay, Joe Sheehan, you can come on up. Morning, we have 3 minutes. Thank you.
Projector. Would you like me to start again? Okay. Okay. Good morning. My name is Dr. Joe Sheehan of Cary Farms. I'm here to ask for a motion to reconsider of my zoning case at today's board meeting. I think it sets a very bad precedent that I would be prevented from speaking at the last meeting because of a temporary restraining order, in effect, a gag order. I will be presenting my case at the West Wind Homeowners Association board meeting next week, which is the only real objector in my case. These 2 points I feel warrant a motion of reconsideration, and I'm happy to have my zoning case brought back to development for a period of time to make adjustments to my case. Separately, I was made aware last night at 6:30 p.m. that the state's attorney is potentially readying a search warrant for my farm. I would consider this an extraordinary act of aggression. And for the past 3 years, my farm has had a Schedule II DEA license attached to the property. This has given the DEA a declaration. I had given a declaration to the DEA that they could come and search the farm at any time because of the fact that it also had a hemp license on it. Why the state's attorney needs a search warrant, if I have given this undertaking to the DEA, I do not know. I'm happy to open my farm at any time, and I've said that multiple times. To think that the county would act in this aggressive manner is appalling. I was in Florida last night when I was informed about a possible search warrant. This morning I am here and I had no plans to be here. The gate of my farm is open for the next 2 days. All the hemp on my property was grown for the University of Illinois and has been sampled and sent to labs multiple times throughout the year and throughout this past growing season. It is not for sale. I've never participated or sold anything that is considered illegal at a state or federal level. As everyone knows, my farm, I have 84 new neighbors. The development committee took away a 30-foot land buffer from my property that made up almost an entire acre. I've spent 4 years being respectful to my neighbors and the community during my cultivation activities. I want to continue that respect through working with the county, not fighting with them. Please don't ring a bell that can't be unrung. Please reconsider my case and help to de-escalate the situation. Regarding the affordable housing, I have an option with a neighbor to do a project, and he has an additional 20 acres that could do affordable housing, and I can bring water and sewer through my property to make that happen. If you guys really care about affordable housing, you would reconsider my project, because this is something that we can do together later on down the line. You need developers to do this. You need people that are willing to do it, and you need people that have the property to do it. If you consider the Affordable Housing Act, if you want to do something in affordable housing, I'm willing to participate in that, and I'm willing to work to make that happen. Thank you.
Thank you. Okay, and do we have any online? Okay, so we have no online comments. So I have 2 just quick remarks under Chairwoman's report. This morning under Finance, we're going to be pulling items 9H and 9I. 9H is the $50,000 for the CVB. That request is being made by the CVB and will be brought back at a future date. And then 9I, this item is being pulled today. The County Health Department leadership and county leadership plan to work together to broaden the vision for the HOPE Task Force. So once that framework is reviewed and refined, we will bring this item back for approval. So those 2 are going to be pulled off Finance today. And with that, can I have a motion on the approval of the Tuesday, January 24th Finance Committee meeting minutes? I had a motion by member Krajewski, a second by member Ozog. Any discussion? Okay, all those in favor? Opposed, motion carries. We move on to budget transfers. Can I have a motion to approve item FIR 006623 budget transfers 214 from various counties, companies and accounting units. I have a motion by member Guston, second by member Garcia. Discussion, member Galassi.
I just wanted to say, I really appreciate the new agenda where we have the hyperlinks so we can click on the backup. This one though, all the backup, like it was all handwritten and difficult to read. So I just wanted to mention that.
Okay, yeah, and I think our budget transfers are usually handwritten. So unless, I don't know if they can put it in, they're usually done, they're usually handwritten, right? They always
Oh, they are?
forever.
Okay.
Yeah, they've always been handwritten.
Disregard
Yeah.
them. Thank you.
Okay, thank you, member Galassi. Any other discussion? Member you?
Thank you, Madam Chair. So I just wanted to mention that I just have some real concerns about some of these budget transfers, just because there are so many. Particularly, I just want to point out the Sheriff Administration had 8 budget transfers, Jail Operations had 2, and the Crime Lab had 1. And specifically, if you want to take a look at page 38 and page 42, they're talking about these software maintenance agreements where essentially like $150,000 worth of software maintenance agreements. These are fixed costs normally, and all of that money is now being funneled into something else when, again, these are usually annual subscriptions. These are license agreements. So I understand that we have to pass these because this is for fiscal year 2022, but going forward, I'm just going to be paying a lot more attention to this.
Great, thank you, member. You appreciate the comments. Okay, any other discussion? Okay, all those in favor? Opposed, the motion carries. We move on to procurement requisitions. We have finance, member Krajewski.
Thank you, Madam Chair. I move to combine items 8A through 6, 8A.6, 8A.1 through 6.
Okay, so we have a motion to combine items 8A1 through 6. A motion by member Krajewski, second by member Guston. All in favor?
Aye.
Opposed, the motion carries. Member Krajewski.
Madam Chair, I move to approval of 8A1, extension of purchase order 5722 issued to Signfield Safety and Loss Control LLC. Extend our contract through March 31st, 2024. 8A2, recommendation of approval of an amendment to purchase order 5912 issued to American Toner Inc. to increase our purchase order amount of $5,000, cover additional costs. 8A3, recommendation for the approval of the amendment to purchase order 5488, which is a contract issued to Hart Interactive Civic for voting equipment, amount of $5,060, resulting in contract not to exceed $7,467,641.27. 8A4, recommendation for approval of an amendment to purchase order 5661 for a contract issued to Pranger Moving and Storage for transportation of voting equipment. Increasing that contract to $35,495, resulting in amended contract total not to exceed $171,495, a 26.10% increase. 8A5, recommendation for the approval of an amendment to purchase order 4156 for contract issued to No Inc. LLC for election poll book software for the clerk's office, and another increase in the amount of $13,500, resulting in amended contract total not to exceed $2,057,500. And last at 8A6, recommendation for approval of a contract to DFM Associates for voter registration, election information management system software for the clerk's office for the period December 1st, 2022 through November 30th, 2023 for a contract total amount not to exceed $156,072.
Okay, I have a motion by member Krajewski, a second by member Garcia. Any discussion on any of these items?
I always make that comment when we approve something after the fact, but the last one started, contract was December 1st, 2022. Just pass that on. We'd like to get those in front of us before they start.
Yes, thank you. So noted. Okay, all those in favor? Opposed, the motion carries. Thank you, member Krajewski. We move on to item B, environmental, member Rutledge.
Thank you, Chair. I'll ask for a motion on ENP 0049-23. The recommendation for the approval of a contract with Aptum Environmental and Infrastructure LLC for consulting services for the continued study of the viability of providing waste and recycling services to unincorporated areas of DuPage for the period of February 14, 23 through November 30th, 23 for a total amount not to exceed $50,000 per RFP 23007BZ.
Okay, I have a motion by member Rutledge, second by member Ozog, member Zay seeking discussion.
Thank you, Madam Chair. Yeah, my discussion, are we getting any buy-in, any help from the townships on this? I mean, waste hauling in the unincorporated area is really not our responsibility. It would be nice if, they can always come here and ask us for money. It would be nice if they bought in on this program since it's gonna benefit them directly. So-
Joy's coming up to answer that. Good morning, Joy.
Let's see, we did meet with the townships that do not currently have the franchise hauling services. That is part of this next phase, is to go back to the townships and talk to them. The county does have the authority and the townships have the authority to do the waste hauling in the unincorporated areas.
Are all 9 agreeing to it, or are we getting, there's only 2 you say that don't have a waste hauler agreement?
There's 3, the bottom 3. So Naperville, Downers Grove, and Lyle all have franchise services. But in order for a township to do it, they have to go out for referendum, and it takes several years to do it. The statute allows the county to do it through the county board.
How much have we spent previously on?
I believe it was a $50,000 contract. I'm not sure. I apologize.
So it's the
I can't
second, so
get
we're up to $100,000 for a program that's not gonna take effect for several years.
It could take effect within months of this board approving the program and then an RFP. So we could have it up and running by 2024.
You just said it's gonna take years. to
If,
do.
under the townships doing it and going out for referendum would take years. It would be a lot faster for the county to do.
Okay. And how many of the 9 are on board with this?
We have not polled them. We have not heard any that are against it. They're all, we can ask, I think that's part of this next phase to really, now that we've talked to them, we've.
So we spent
discussed the-
50,000 to start a program, which we didn't include the townships. Now we're gonna spend another 50,000 and go back and talk.
We're gonna talk to them again, and this is, I don't anticipate this is going to take the full 50,000. But it might, it's there as a cushion.
It would be nice to get some concrete responses from the townships. It's.
Agreed.
affects them. Okay,
Agreed, absolutely.
Thank you.
Member Rutledge and then member Krajewski, member Rutledge.
Yeah, if I could just add that, the president or head of the, highway supervisors for the townships has said he is neutral on this proposal. He is not, he's waiting to hear what we come up with. Lake County has done this, so we do have a roadmap to implement this in DuPage from an environmental aspect. I think this is important. There was one other thing I wanted to add too. And there are 3 townships already have a single hauler contract, and we would not step on that at all. So
Thank you, member Rutledge. Member Krajewski.
Yeah, thank you. Well, I know Downers Grove has it, and I don't think it took very long. They did by referendum, though. They put a referendum on a ballot, passed it, and then implemented it. I'm not sure why the 6 townships that don't use it just don't put a referendum on the ballot themselves in April to see what their residents want. I know when Downers did it, there was some controversy. Some residents didn't want to change, some did. They ultimately passed it via referendum and then they implemented it pretty quickly. It makes a lot of sense to have one waste hauler. You don't want 6 different trucks with as damage they do to roads going down some neighborhood. But again, I'm not sure why the 6 townships don't throw it on their April ballot. The election's coming up, just put it out there, see what their residents want. I mean, if we pass it as a board and they put a referendum and all 6 say no.
Okay, thank you, member.
Krajewski,
Yeah.
we did send a pretty significant survey out to residents to find this out and had a much higher response rate than we expected. So I do think that this issue is on people's radar.
Oh, sure, there could be. And if they put referendum and it all passes, then that's great. And we're gonna have to spend 50 grand. We just implement it. It's the money. Then we put it.
Okay, thank you. Any further discussion? Okay, all those in favor? Opposed? A motion carries. We move on to judicial public safety. Member Evans.
Thank you, Madam Chair. I would like to get a motion. I would like to move to approve JPSR 004923. Acceptance of the Illinois Emergency Management Agency Emergency Management Performance Grant in the amount of $201,745.82.
Motion by member Evans, second by member Covert. Any discussion? Okay, all those in favor?
Aye.
Opposed, the motion carries. Member Evans?
Thank you, Madam Chair. I would also like to move to approve JPSR 005623 revision to personnel budget for the 18th Judicial Circuit Court.
Motion by member Evans, second by member Covert. Any discussion? All those in favor? Opposed? The motion carries. Thank you, member Evans. We move on to Public Works. Member Garcia.
Yeah, hi. I would like to move for motion to approve 8D1 FMP 0056-23 recommendation for the approval of a contract to Red Wing Brands of America, Inc. to furnish safety shoes and work boots as needed for facilities management, public works, stormwater and care center for the period February 23rd, 2023 through February 22, 2024 for a contract not to exceed $37,900 for facilities management, $10,000 for public works, $20,000 for stormwater, and $4,500
I have a motion
for care center.
by member Garcia, second by member Childress. All those in favor or any discussion? No. Okay. All those in favor? Opposed? Motion carries. Thank you. Member Garcia.
Move for a motion to approve FMP 006023 recommendation for the approval of a contract to Royal Pipe and Supply Company to furnish and deliver public supplies by the specified manufacturers at discounted rates as needed for county facilities for the period February 24th, 2023 through February 23rd, 2024 for a total contract not to exceed $148,007.50.
Okay, I have a motion by member Garcia, second by member Childress. Any discussion? All those in favor?
Aye.
Opposed? The motion carries. Member Garcia.
Motion to approve FMR 0600-23 authorization to submit a grant application to the Community Development Block Grant COVID-19 response funding for the DuPage Care Center for the air handling units replacement project in the amount of $1,900,000.
Motion by member Garcia, second by member Childress. Any discussion? All those in favor?
Aye.
Opposed? The motion carries. Member Garcia.
Motion to approve PWP 005723 recommendation for the approval of an agreement between the County of DuPage, Illinois and Donahue and Associates, Inc. for on-call professional engineering services for supervisory control and data acquisitions, support for various DuPage County Public Works and stormwater facilities for the period of February 14, 2023 to December 31st, 2025 for a total contract not to exceed $95,000.
I have a motion by member Garcia, second by member Desart. Any discussion? All those in favor?
Aye.
Opposed? The motion carries. Member Garcia.
Motion to approve recommendation for the for PWP 0058-23 recommendation for the approval of an agreement between the County of DuPage, Illinois and Baxter Woodman Consulting Engineers for on-call professional engineering services for permit review and to review and update the water and wastewater treatment ordinance for public works for the period of February 14, 2023 to November 30, 2025 for a total contract amount not to exceed $95,000.
I have a motion by member Garcia, a second by member Childress. Any discussion? All those in favor?
Aye.
Opposed? The motion carries. Member Garcia.
And finally, a motion to approve PWP 005923 recommendation for the approval of an agreement between the County of DuPage, Illinois and Trotter and Associates, Inc. for on-call professional engineering services for DuPage County-owned water treatment and wastewater treatment facilities and systems for public works for the period of February 14, 2023 to November 30th, 2025 for a total contract amount not to exceed $700,000.
I have a motion by member Garcia, a second by member Rutledge. Any discussion? All those in favor?
Aye.
Opposed? The motion carries. Thank you, member Garcia. We move on to stormwater. I have member Zay.
Thank you, Madam Chair. I move on SMCO 8-23 AMS change order number 2 Elmhurst Quarry East Low project. Amendment to resolution, increase project by $84,413.46, result in increase of 6.74%.
I have a motion by member Zay, a second by member Desart. Any discussion? Okay, all those in favor?
Aye.
Opposed? The motion carries. Member Zay.
Madam Chair, I move on SMP 54-23, between DuPage County and Engineering Resource Associates for professional engineering services, the amount not to exceed $70,000.
I have a motion by member Zay, a second by member Desart. Any discussion? Member you.
I actually have a question because it looks like Engineering Resource Associates and then the very next line item for Gasberg Alberts Consulting. They're essentially the same professional engineering services, and I just want to know what the difference is.
Can anybody speak to the difference in the two engineering? Oh,
Sarah's
Sarah,
on.
are you on the
Yeah.
line?
We use multiple engineering. One is, I know the second one is for on-call surveying. And then the other one is for on-call for our projects, for our ARPA projects.
Thank you. If you guys can hear me, Stormwater Committee Chairman Zay was exactly right. One is for surveying and one is for engineering.
Okay.
Thank you.
Okay, thank you, member you. Any other questions? Okay, seeing none, all in favor?
Aye.
Opposed, the motion carries. Member Zay.
Madam Chair, I move on SMP 5523. In agreement between DuPage County and Gasper Alberts for consulting on-call professional engineering services, the amount not to exceed $70,000.
Motion by member Zay, second by member Desart. Any discussion? Okay, all those in favor? Opposed, the motion carries. Member Zay.
Madam Chair, I move on SMR 6123. Additional appropriation for 2011 drainage capital projects, the amount of $36,665.
We have a motion by member Zay, a second by member Garcia. Any discussion? All those in favor? Opposed, the motion carries. And I did want to point out those Valentines that are at your desk. Thank you, member Zay. That was very sweet of you.
You're
I'm
welcome.
sure everybody
Happy
appreciates
Valentine's
it. That was
Day.
very, very nice of you. So. So thank you very much. We move on to technology. Member you.
Thank you, Madam Chair. I move on item 8F1, recommendation for the approval of a contract purchase order to BMC Software Inc. for annual BMC software licensing and maintenance for Mainview Z Enterprise Automation and VSAM file management software for information technology. This contract covers the period of 1 year for a contract total amount of $42,256.33.
Have a motion by member you, a second by member Desart. Any discussion? All those in favor?
Aye.
Opposed, the motion carries. Member you.
Thank you. I move on item 8F2, a recommendation for the approval of a contract purchase order to Acela Inc. for managed application services for the building and zoning, transportation, stormwater, and public works departments to provide support with permitting software that will allow online submittals, electronic document reviews, permit tracking, and mobile inspections by applicants and or county staff. This contract also covers the period of 1 year from February 21, 2023 through February 20, 2024 for a contract total of $195,000.
Have a motion by member you, a second by member Desart. Any discussion? Okay, all those in favor?
Aye.
Opposed, the motion carries. Thank you, member you. We move on to transportation. Member Ozog.
Okay, thank you, Madam Chair. I move for approval. I move to combine items AG 1 through 9.
Or we have a motion by member Ozog, a second by member Guston to approve items 1 through 9 under transportation. All those in favor? Opposed, the motion carries. Member Ozog.
Okay, I move for approval of 23057, or excuse me, I move for approval of DTR 0242A19, amendment to a resolution IGA between County of DuPage and City of Wheaton for mowing, decreasing funding in the amount of $2,991.25. I move for approval of DTR 0921B18, for amendment to a resolution IGA between County of DuPage and Village of Carroll Stream, decrease the funding in the amount of $6,060.10. I move for approval of DTR 0004A19, IGA between County of DuPage and Addison Township for mowing, decreasing the funding in the amount of $18,195. I move for approval of DTR 0078A19, IGA between County of DuPage and Village of Woodridge, decreasing the funding in the amount of $18,919.72. Move for approval of DTR 003A19, IGA between County of DuPage and Village of Willowbrook for mowing, decrease the funding in the amount of $23,260. I move for approval of DTR 0021A19, IGA between County of DuPage and Bloomingdale Township for mowing, decreased funding in the amount of $27,898. I move for approval of DTR 0019B19, in IGA between County of DuPage and Winfield Township, decrease the funding in the amount of $32,209. I move for approval of DTR 0043A19, IGA between County of DuPage and Village of Glendale Heights, decrease the funding in the amount of $43,080.70. I move for approval of DTR 0954A18 IGA between County of DuPage and Naperville Township for mowing along county roads. Decrease the funding in the amount of $221,578.
Have a motion by member motion by member Ozak, second by member Garcia, and member Rutledge seeking recognition. Go ahead.
Thank you, Chair Chaplin. I cannot tell you how thrilled I am to see the decreases in these contracts. I think when we talked about this last year, it was $500,000. But I think this is a Mother Nature decrease. It's not anything to do with the fact that we have improved our turf to be more environmentally and pollinator friendly. So I will continue to advocate for that. And again, I think that Mother Nature blessed us with this decrease, but we need to do a better job of that. Thank you.
Thank you, member Rutledge. Any further discussion? Member Krajewski.
Well, I was just gonna say, I was gonna compliment the new chairwoman for transportation. 13 decreases, only one increase on this whole agenda, and she just got started. So I want to say
She's awesome.
congratulations to the new chairwoman.
Great staff, Mr. Krajewski. Thank you.
Okay, any further discussion? Okay, all those in favor?
Aye.
Opposed? The motion carries. Member Ozak.
Thank you. I move for approval of DTR 0381B15, amendment to resolution DTR 0381A15, local public agency amendment for federal participation between the County of DuPage and Illinois Department of Transportation for improvements along County Highway 33/55th Street from Adams to Plainfield Road, to decrease the funding in the amount of $6,497.37.
Okay, I have a motion by member Ozak, a second by member Garcia. Any discussion? All those in favor? Opposed? The motion carries. Member Ozak.
Thank you. I move for approval of DTR 0155B15, amendment to resolution DTR 0155A15, local public agency agreement between County of DuPage and IDOT for traffic signal upgrades at various county and state intersections to decrease the funding in the amount of $7,020.68, resulting in an amended total amount $27,979.32, a decrease of 20%.
I have a motion by member Ozak,
6%.
second by member Yu. Any discussion? All those in favor?
Aye.
Opposed? The motion carries. Member Ozak.
Thank you. I move for approval of DTR 0156A15, amendment to resolution DTR 015615, local public agency agreement for federal participation between the County of DuPage and IDOT for improvements related to installation of DuPage County Central Signal System to decrease funding in the amount of $10,878.95.
Motion by member Ozak, second by member Garcia. Any discussion? All those in favor? Opposed? The motion carries. Member Ozak.
Thank you. I move for approval of DTR 0543A15, amendment to resolution DTR 054315, local public agency agreement for federal participation between the County of DuPage and Illinois and IDOT for improvements along County Highway 31 Plainfield Road from Lamont Road to Cass Avenue to decrease the funding in the amount of $356,554.81.
Have a motion by member Ozak, second by member Garcia. Any discussion? All those in favor? Opposed? The motion carries. Member Ozak.
Thank you. I move for approval of DTR 0281A21, amendment to resolution DTR 028121, issued to Schroeder Asphalt for the County Highway Bloomingdale Road and County Highway 21 Geneva Road intersection improvements to increase the funding in the amount of $20,444.91.
Have a motion by member Ozak, a second by member Garcia. Any discussion? All those in favor?
Aye.
Opposed? The motion carries. Member Ozak.
Thank you. I move for approval of DTP 005023, recommendation for the approval of a contract to Walter Incorporated to furnish and deliver one Doosan forklift to the Division of Transportation for a contract total not to exceed $36,658.09 per Sourcewell contract.
I have a motion by member Ozak, second by member Garcia. Any discussion? All those in favor?
Aye.
Opposed? The motion carries. Member Ozak.
Thank you. I move for approval of DTP 005123, recommendation for the approval of a contract to Roland Machinery Company to furnish and deliver one HD tandem roller for the Division of Transportation for a contract total not to exceed $56,017.05.
Have a motion by member Ozak, a second by member Garcia. Any discussion? All those in favor?
Aye.
Opposed? The motion carries. Member Ozak.
Thank you. I move for approval of DTP 005223, recommendation for the approval of a contract purchase order to Auto Tech Centers to furnish and deliver Goodyear tires as needed for Division of Transportation for the period February 15th, 2023 through March 31st, 2024 for a contract total amount not to exceed $150,000.
Motion by member Ozog, second by member Garcia. Any discussion? All those in favor?
Aye.
Opposed? The motion carries. Member Ozog.
Thank you. I finally move for approval of DTR 005323 intergovernmental agreement between the County of DuPage and the Village of Lombard for Central Signal System Expansion Number 4 pertaining to installation and future maintenance responsibilities. County to be reimbursed $486,000.
Have a motion by member Ozog, a second by member Yu. Any discussion? All those in favor?
Aye.
Opposed? The motion carries. Thank you, member Ozog.
Thank you.
We move on to item 9, finance resolutions. Member Krajewski.
Thank you, Madam Chair. I move to combine items 9A through G, which are all acceptance and appropriation resolutions, and pull 9H and 9I.
Have a motion by member Krajewski, second by member Guston. Any discussion? All in favor? Oh, I mean, this is to combine, sorry. All in favor? Okay, any opposed? Motion carries. Member
It
Krajewski.
was to include it and pull 9H and I. Get them all in there. Move now to approve FIR 0055-23 authorization to transfer $60,248 in the budget from the circuit court for fiscal year 2023. FIR 0057-23 acceptance appropriation of the Illinois Department of Human Services Emergency Solutions Grant CARES Act for $383,397. FIR 0058-23 acceptance and appropriation of the National Children's Alliance Equipment and Technology Grant $28,998. FIR 0059-23 additional appropriation for the neutral site custody exchange fund $2,356. FIR 0064-23 acceptance appropriation of the DuPage Housing Authority Family Self-Sufficient Program Grant $121,726. FIR 0065-23 acceptance of an extension of time for the ILD CEO Community Services Block Grant of dollar amount there. And last is FIR 0067-23 acceptance appropriation for Help America Vote Act for polling place accessibility $585,584, and we're pulling 9H and 9I.
Motion by member Krajewski, second by member Garcia. Any discussion? Okay, all those in favor? Opposed? Thank you, member Krajewski. Items H and I are pulled. Please continue.
Thank you, Madam Chair. I move on FIR 0070-23 annual financial commitments to support the Illinois Association of Counties, $28,820.
Have a motion by member Krajewski, a second by member Guston. Any discussion? All those in favor? Opposed? The motion carries. Member Krajewski.
Thank you, Madam Chair. I move on FIR 0071-23, which is the annual financial commitments to support the National Association of Counties for $18,338.
Have a motion by member Krajewski, a second by member Guston. Any discussion? All in favor? Opposed? The motion carries. Member Krajewski.
Thank you, Madam Chair. I move on FIR 0072-23 annual financial commitments to support the University of Illinois Cooperative Extension Program, the amount of $30,000.
Have a motion by member Krajewski, a second by member Guston. Any discussion? All in favor?
Aye.
Opposed? The motion carries. Member Krajewski.
Thank you, Madam Chair. I move on FIR 0073-23 additional appropriation for the ARPA fund for ICNA relief for the amount of $128,000. It's an ARPA item.
Have a motion by member Krajewski, a second by member Guston. Any discussion? All those in favor?
Aye.
Opposed? The motion carries. Member Krajewski.
Thank you, Madam Chair. I move on FIR 0076-23, which is approval of a grant agreement between the County of DuPage and ICNA relief for the use of the ARPA funds in the amount of $128,000.
Have a motion by member Krajewski, a second by member Guston. Any discussion? All those in favor? Opposed? The motion carries. Member Krajewski.
Thank you, Madam Chair. I move on FIR 0074-23, which is additional appropriation for the ARPA fund for proposed for success for $45,000, and that's an ARPA interest item.
I have a motion by member Krajewski. That was a tie with the, okay, member you said I can give it to member Guston, second by member Guston. Any discussion? Member Rutledge.
Yes, I'm just curious what ARPA interest means in this resolution where the others are all ARPA items. Is this something
This
we're
is
not really?
No, this is the interest where the interest funds. We're using the interest money from ARPA.
Got it. Thank you.
Yes, you're welcome. Okay, any further discussion? All those in favor? Any opposed? The motion carries. Member Kajewski?
Yeah, thank you. And the last, the $10 million set aside for revenue replacement and interest on ARPA, we don't have to use for follow the ARPA rules
Yes.
guidelines. We can do it any way we want. So
Yes.
hence that's why that was an interest.
Thank you.
And now we're at FIR 007523, which is the approval of the grant for 45,000.
Motion by member Kajewski, second by member Guston. Any discussion? All those in favor? Opposed? The motion carries. Member Kajewski.
Madam Chair, and last move on 23-0767 supervisor assessments to complete courses for not to exceed $750.
Motion by member Krajewski, second by member Zay. Any discussion? All those in favor? Opposed? The motion carries. Okay, we move on to 10 informational. Member Krajewski.
Thank you, Madam Chair. I move to receive and place on file informational items, A, payment of claims, B, wire transfers, C, grant proposal notifications, D, appointments, including D 10-2, which is the appointment of our board member Michael Childers to the DuPage County Historical Museum Foundation.
Okay, I have a motion by member Kajewski, second by member Cahill. Any discussion? All those in favor?
Aye.
Opposed? Motion carries. Thank you, member
Thank you,
Kajewski.
Madam Chair.
So do we have any old business? Member Rutledge.
Thanks, Chair Chaplin. I don't know if this is old or new, but I'm a little distressed to hear about Dr. Joe Sheehan's comments this morning saying that he understands that there is a search warrant out on his property. This falls in my district. This is a gentleman that is proposing something that could be an economic draw to my district. He is proposing working with a legal substance in the state of Illinois and the county of DuPage, unincorporated areas, and to be treated like he is doing something illegal is beyond the pale. And I would appreciate if somebody from the state's attorney's office would call me and let me know what the source of this is and why they are harassing one of my constituents.
Okay, thank you, member Rutledge. Do we have any member Eckhoff?
I don't know what's going on out at that property, but I would be hard pressed to think that our state's attorney is harassing anybody. And I'm not sure that Mr. Sheehan got whatever's going on right. So before we cast aspersions, I would like a report maybe during the county board as to what's going on.
Thank you. Thank you, member Eckhoff.
Maybe executive session too.
Thank you, member Eckhoff. Appreciate that. Any new business? Okay, I am advised we do have executive session. So pursuant to Opens Meeting Act 5 ILCS 120/2 collective negotiating matters. I'm informed we do have matters before us requiring us to enter into executive session. So I will ask those not associated with the executive session to please exit the room. And I will make a motion to go into executive session. We have a motion by member Krajewski, second by member Cahill. All those in favor? Opposed? Okay, the motion carries.